Okay, some of the things that people really complain about a lot on Robinhood app is why is there no research component? And this is part of where I think M1 Finance does better. So see, you have the invest spot, right? Yes, get out of here. Remind me later. Spin, borrow. Now go to research, right? It's always at the bottom. Now we can literally just sit here and type in different stocks, funds, and expert pies. But let's go with a few dividend stocks. We're just going to review them. WPG. WPG is Washington's Prime Group Incorporated. All right, you're talking about a $5 stock with a $956 million market cap. It's got a $1 dividend, which puts it extremely high at 17% dividend. Now, this gives you some information on it. EU, move to the block dirty money list. It has a lot of different things. If you go here, 52-week range, 1-year record, 3-year analyzed. Okay, you can always add it to your watch list. So let's add to our watch list, right? All right, so then profile, you kind of read about the company. Just like you did on StockPal app, this is a really great opportunity to review and study the companies and what they're about. So majority of its revenue comes from leasing properties to tenants, which includes department stores, restaurants, homeware, and furniture stores. So this is a conglomerate of like residential and development retail properties. So mostly retail though. Centers. So it has 845 companies. You can see who the CEO is, and how many employees. It's $5. Okay. It's down 7% right now. Okay. So now let's go back. Okay. Now we're going to look for another company. And everybody says, oh, Ericka, why are you only looking at really high yield dividend stock? Because if I was a person looking to make my money work for me, where would I go first? I'd go to high dividend yield stocks. I would review the companies and see if they were safe. 2, I'm not just going to sit my money in Apple or just a big company that's not going to really provide me income. So let's go here to MSB. Okay, this is, oh man, both of those are good. So let's go to Trust. Okay, this is financial service, asset management, 386 million market cap. All right, it's a $5 dividend. That's extremely high for a 19% dividend. So again, look at the price, kind of up and down. 3-year, it's been up 63%. 5-year analyzed. Whew, it's got a lot going on here. I'd have to do more research on this. But essentially, it's a royalty trust that operates in the United States. It's involved in conservatism and protection of assets held. All right, Iron Mine, located in Minnesota. Interesting. It's a common stock. It doesn't give me a ton. I'll add it to the watch list, though. All right, so go back. Let's check out this. I want to see what this is about. Oh, this is financial service banks. All right. This is a smaller dividend, more normalized. Midland States Bank Corp. 0, like $1. This is a more normalized dividend position. Most people are going to say this is great because people aren't used to really high dividend stocks. They think it's an example of the company's risky or it has problems or they're just trying to get people in on the company. So again, this is important. 1-year return, it's down almost 20%. It's a bank holding company, deposits online banking, loan home equity, $840. All right, definitely check some more information. Add that to the watch list. Okay, we're gonna go back. We're gonna go Arlington Asset. Okay, AI. There we go. Arlington Asset Investment Corp. Class A, new, 308 market cap, $1.50 dividend, which puts it at 16% returns, which is pretty high. So let's go price history right here. Ooh. That's bad. So it's this 1-year return, it's down 26%, almost 27%. 3 years, it's down 13%. 5-year, it's down 20%. What is making this company behave like this? So let's roll up and see. Let's see. Yeah, I would stay away from this. It's got 12 employees, but like something's off. I don't know what it is. Something's off. I mean, I'll add it to the watch list, but I would say that's a no. That's a risk. That's a risky. Something's off that or the other company. All right, so let's say MVO, which is MV Oil Trust. Okay, again, maybe if you get nervous, Ericka, these energy companies you're always talking about that have high interest, listen, these companies need capital to run them. So again, 90 million in market cap, $1.26 in dividend, which comes out to 16% interest dividend. All right, so year return is only down a little bit. 3-year, it's up 15%. 5-year, down 20%. So it's got some ups and downs there. Let's check out this portfolio. Its underlying properties consist of MV Partners, LLC MV Partners, net interest in all oil and natural gas properties, which are located in mid-continent region states of Kansas and Colorado. Interesting. I'll add it to the watch list. I would still need more information because its news is like none. So this sounds like a very small company. Be a little nervous about that. But I bet at that size, you probably could even go to its headquarters. Oh, yeah, pretty sure. All right, let's try this one. Okay. No? I don't know about that. Okay. Next one. That's the last one, then we'll break it to the second video. Orchard Island Capital. All right, it's $6.73. It's got almost $1 dividend at 13% dividend returns. Interesting. So, okay, let's go. It's got $327 million market cap. The past year, down 10%. 3-year, down 12%. 5-year, down 12%. So this one's got some problems. It is a mortgage-backed securities. Okay, United States. I'm not gonna lie to y'all. Stay away from that one. I just think I don't go too heavy. Like all my real estate stuff is tied to something. It can't just be mortgage-backed securities. It can't just be this. Let's check out Oracle while we're at it. So Oracle, $52 a share, $188 billion market cap, and 76 cents dividend, which makes it like a less than 2% dividend. But Oracle is a company that is just on the move. You're going to need tech in the future. Oracle even has a conference in March, I think. That's going to be coming up. So again, 3-year return, 12%, 5-year return, 6%. It's a slow and steady. Okay, let me see if there's anyone else. Let's see what else we have. I like how it has articles of what you should do. This is something you can sit down for 1 hour and read 1 or 2 of these. I think that's important. Look at this. Why crypto companies still can't open checking accounts. That's important. All right, so let's see this one. BK. Oh, oops, no. Okay, so our last one, if it will pull up, it's $1.18, 32-cent dividend. That's 27% return. There's something going on with that company. Yeah, it's down 75%. This is a stay far away. Down 30%, down 30. This is literally almost like, this is what a pump and dump looks like, you guys. This is exactly what it looks like, because very little noise will move this thing up and down. I'm going to say this twofold. Stay away from this stock. But if you're someone who's like waiting for it to hop up, because the size of it at $1.18, if it doubles, you double your money. But like, this is just not a good one. It's not a good one, you guys. So again, it deals with gathering, storage, transportation services for companies engaged in production, crude oil, and liquid asphalt cement. 4 segments. It's interesting, but I would ignore this one. This is a no. So everybody, this is Ericka from the Classy Climb blog. Be careful out there, research, read these articles, spend a good hour kind of just educating your mind if you want to be in the stock market or you want to invest some of your extra money in the stock market. Again, there's a reason I'm focusing on dividend-based stocks, and that's part of it. So, hold on.